Welcome to Drill Down Earnings. We have quarterly results out from Dell, important company forever, and now a really important company in the world of AI. This is the business story about one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology, and this is certainly one of those companies. Q4 results from this company, better than Wall Street expectations. The company, in terms of specific numbers, $23.9 billion. That was light of some numbers on the street, but it's up 7% on a year-over-year basis, kind of in the same range. And diluted EPS of $2.15, also maybe a little bit light of what Wall Street expected. I guess we can call this a slight miss on both top line and bottom line. And what we fundamentally saw is that revenue growth has flattened in this business, only 7%. You'd think they were going great guns, selling all these great AI systems into data centers and so on. We heard some great product announcements. We heard about a fantastic backlog, a $9 billion backlog they talked about on the conference call. We understand that a big part of that is an order from xAI, Elon Musk's AI company, which is out there from what we understand. I haven't good information. In fact, I can just tell you, they're out there raising money right now. There's some shares for sale in this company in the private markets. I've been offered some, and I'm not buying because I'm just not buying, lots of reasons. But nonetheless, it's not investment advice. I don't give investment advice, but I do want you to take a look at what's going on here with Dell. So they're selling a lot of AI systems into a lot of these companies, and they're improving operating margins across the board, whether it's from selling PCs or these fantastic server to networking devices, storage, commercial products, whatever. They're seeing 9% operating margins. Now, what is the business? Let's look at it in its totality, I said in English, in this quarter. So servers and networking, not the biggest part of their business. Their commercial business is the biggest part of the business, selling PCs like the giant Dell monitor that I have over here. You have to trust me on that one. Storage, very big with the acquisition of EMC. Of course, it's a big part of their business. 8% of their consumer laptop, mainly laptop division, as well as other consumer products, and servers and networking. Really important here. And let's get into that. So the servers and networking business have been growing fantastically, growing up into the high double digits and still growing quite well. In the quarter, they did $6.6 billion, $6,634 million to be exact, in this world of servers and networking. But that's slower growth than what they were seeing 3 quarters ago, slower growth than last quarter. So growth kind of matching what it was 3 quarters ago. So slowing growth, still really good growth, just under 40%, but $6.634 billion, not what you might have hoped a few quarters ago looking forward. It's also worth pointing out, and I was texting with a friend about this earlier today, that their commercial PC business, consumer PCs stink, but they're a much bigger business of commercial PCs. You want to look at it on a year-over-year basis. You don't want to look at the last quarter because it's a very cyclical business, whether it's because of company spending schedules or the rest of the PC business. Back to school is so big. Year over year, it's up 5%. And it was up last quarter, and it was up the quarter before that, and the quarter before that. Now, we haven't seen growth in commercial PCs in many years. And they talked on the conference call about how there may be kind of some exhaustion with older PCs and with older Microsoft operating systems, and that they're starting to see people wanting to spend a little bit more money on the corporate side to get to that fabled PC refresh. It used to be every couple of years in the computer world, and not so much anymore. So how did the stock react when these numbers came out? Well, not very favorably. The stock sold off 3% in after-hours trading when we saw that they kind of missed numbers. But the stock's up 18% for the year going into this print. So a little bit better than the S&P 500, but not fantastically better. Nonetheless, as I mentioned before, servers and networking, and it's really, we got to think about AI when we think about these things right now, because they're buying tons of NVIDIA chips. They're getting a lot of the business, fighting with HPE, really strong competitor out there, Supermicro, a feebled, hurt competitor out there after some accounting challenges at that company, self-inflicted accounting challenges. But asked in the conference call, what's really driving their business going forward, and what's really driving the server business? Has something changed, or are these guys still in the right position to be selling all the things that are needed in the world of AI? Here's Chief Operating Officer Jeff Clarke.
There's an ability to really distinguish your engineering and value add in that step, which is an opportunity for us to extract value, an opportunity for us to reduce cost. I mean, these aren't reference designs, or as we would affectionately call in the engineering community, they're not cookie cutter designs. We're designing a unique rack, a unique power distribution unit, our cooling, our manifold, the cold plate, the ability to engineer that and to drive that through the scale of our supply chain are opportunities for us. Helping our customers attached with our networking and with our storage are opportunities. And while still small, it remains an opportunity because every large cluster, and for that matter, every AI workload requires data to fulfill its need. Services, installation, deployment, those are value-add opportunities for us that we continue to build on. And then obviously the ability to be a time-to-market advantage. Those are areas that we continue to focus on. They drive differentiation.
So Dell, they drive. Michael Dell doesn't bother to get in these conference calls anymore, but we love hearing from Jeff Clarke. He's got a lot to say. But what's your big drill down earnings takeaway? What's the one number that tells us a whole lot with the drill down earnings bite? We have that. So Dell Q4 earnings, a really strong quarter for this company, but not as strong as the expectations. So the stock sold off. But let's look at the actual numbers when we look at what's going on with this company. So we saw $23.9 billion in revenues in just one quarter, up 7% year over year. But that's not the kind of increase that we've seen from this company in recent years, and I think or even recent quarters. I think there was hope that AI would drive some numbers a lot better. And the real problem is that the AI demand has cooled off. So they're the largest cloud service providers, enterprise at scale, they're edge PC business. There's AI in everything that these guys are selling. They've got $9 billion in backlog, but they only saw, and here's your drill down earnings bite, the one number that tells you a whole lot, 37%. Now that's a good number, but it's a lower number than they've had. 37% growth in servers and networking, leading to a little bit of a disappointment with Dell quarterly earnings. All right, thanks for checking out Drill Down Earnings. We'd love to have you follow a lot more of what we do, so subscribe to us on YouTube and keep following us wherever you're watching us, right here from Epistrophy Capital.